let's get started. Kaylee, would you like to introduce yourself?
Great. Thanks, Jonathan. Kaylee Mao with TriNet. I am a senior sales consultant. I've been with TriNet now for going on 5 years in July, and I focus specifically on tech and the tech ecosystem. So working a lot with venture-backed, capital-backed, private equity-backed tech companies sort of throughout their growth stages. And the sort of the core of what TriNet does, a little bit what we'll talk about today, is outsourcing the HR function and helping with risks associated with that. So thanks for having me.
Awesome. Jessica.
Sure. Thank you for having me as well. So my name is Jessica Schultz. I'm located in Chicago, also work for TriNet, been there about 2 years. And I focus on kind of our investor base, if you will, so venture capital and private equity. So of course, work very closely with Kaylee since we're, covering both the kind of financial investor side and then also the technology company side. So very excited to have this conversation today and look forward to connecting with you guys hopefully afterward.
Tom.
Tom Firestein, also in Chicago. I run a specialty insurance brokerage called Calculated Risk Advisors. We work with a lot of tech and venture capital clients. We do everything but benefits, so work a lot with TriNet. Also a reasonably active investor and co-run Nameless Ventures in Angel Group.
Awesome. And last but not least, Horace.
Good afternoon, everyone. My name is Horace Flournoy, originally from Chicago. I co-founded a company called SwayBrand. We're a B2B SaaS company. We connect brands, small, medium, and enterprise with diverse sets of brand ambassadors who we call Authenticas. So looking forward to the call. Thank you again, Jonathan.
Awesome. So as you can see, we've got people who work with VC funds, startups, and founders themselves. So hopefully you've got a good range of perspectives here. So to get started, just to get everyone on the same page, Kaylee, what is risk management?
Sure. So broader sense, risk management is essentially the process of identifying, accessing, and controlling various threats, right, to an organization's capital and earnings. So at the broadest sense, there's obviously several different levels of risk management in different departments, but the ones that we're going to focus on today really relate to more so people and like platform related risks, right? And we'll get into that a little bit further, but mostly around the human resources area, people, and then also the insurance piece, which I think Tom will touch on.
Awesome. Yeah, Tom, what does it mean to you?
Yeah, I think what's interesting about this space is that it changes over time. So when you're an early stage startup, you're facing a lot of risks, most of which can't be controlled in a meaningful fashion, can't be insured. And as you move your company towards maturity or an exit, your priorities change, and that makes this space interesting in that it's always a moving target of what you should be paying attention to and what's going to come next that you have to take care of.
That's great. So I was excited to do this topic because I feel like this is one of those areas where it's hugely important, but no one really sort of talks about it, and people have to like figure it out as they go, and you only really understand the risks after the fact. So with that, I mean, what are some of the biggest risk factors that early stage entrepreneurs don't even think about? Jessica.
Sure. So, obviously our lens is kind of employment, from an employer's perspective. So I think, some of the biggest things very early stage companies that we talk to maybe aren't super well versed in or don't have a lot of subject matter expertise in are things like, employee classification. So, do you have employees classified properly as 1099 or W-2? And do you understand if you have them misclassified, what kind of financial penalties might come with that? Another thing that we talk to a lot of founders about is just managing like overall compliance, if you will, with federal and state regulations. So like when you're hiring people, there's certain questions you can and can't ask if you're hiring someone in Illinois versus New York. So every state has their own, set of laws that you have to abide by. And so especially I think as we continue to move into, embracing a virtual work environment and people are hiring the talent, really wherever it is, it doesn't necessarily need to be local talent anymore. Keeping up with all those different state regulations can be really challenging, and again, can come with, significant financial penalty if not managed properly. And then I think probably the other big one is just understanding things, like workers' compensation. I think especially in the tech world, we don't think about that as a huge risk. Like most of the time we're sitting in front of a computer, but you still have to have it for legal reasons, or if you have people traveling, there's just basic things that you have to have kind of check the box just to avoid, again, financial penalties, that can be large and small. Those are kind of my thoughts. I don't know, Kaylee, if you have anything to add.
Yeah, and I would just say, I mean, in general, I think earlier on, a lot of startups don't feel that they necessarily need an in-house HR person to help with a lot of those types of, regulations, which I think we would partly agree with. I don't think it necessarily means that you need to have a full-time person in-house. But as you do grow, there's lots of different, very nuanced rules per state that Jessica kind of alluded to, that, unless you're an expert, an HR expert in all 50 states, then you're just not going to know, that that's the case, right? Like an example was beginning of this year, this is for a larger group, but any company that has 25 or more employees, it's mandatory that they do sexual harassment training, right? So last year in July, there were any group that had, I think it was above 20 employees in Illinois, was mandated to offer a 401k, right? So it's things like that, obviously as a founder, those aren't things that, it's very easy to keep up to speed with. So I think those are the areas that you kind of have to have, either some other expertise or that's something that you hire out for, but something to keep in mind.
That's great. And Horace, I mean, you're a seed stage founder, you don't have an HR person yet. So, I mean, what are the things that are keeping you up at night, and sort of how are you sort of trying to, self-manage or self-educate yourself?
Sure. Yeah, Jonathan. And I think for us, and what could be the base case for many other startup founders in our shoes, is really the preparation. I think it's preparing to get to a point where we can be partners with TriNet, and so I think that starts with a great set of legal. And many times when we look at risk management, I think on our level, it really just comes down to a sheet of paper, right? Our employee contract or contractors agreements. So for us, it's great to have advisory counsel, and to start great legal that you can have to help you mitigate some of those early risks regarding your contractors in our case, before, and then setting ourselves up to, okay, how can we make this transition to being I guess a real company, right? that has all of these features that people would love to be a part of with any growing startup.
That's great. Tom, I mean, you work with a lot of founders as well. I mean, what do you find that they often, don't think about?
Yeah, I mean, I think a lot of the early stage founders we talk to who just have an idea come in and want to buy insurance on everything. And I often ask them, if you get hacked tomorrow, all your clients' data is gone and your software breaks, are you going to have a business the next day? And the answer is often no. So then we take a few steps back and start to talk about what's important. to mitigate risk. And the employment space is huge, whether you're starting out or you're at any point before you have a full-time HR person. You know, here in Illinois, if you needed to buy workers' compensation, you didn't, it's a felony. You can go to jail. As this pandemic has come across, we've had a lot of 30, 40, 50 person companies who are all in Chicago that now have people spread across the country and have violated various employment laws that they weren't familiar with. So the employment stuff, in my mind, is the biggest early on, the biggest thing that I see trip up founders. You know, once you get past that and you start signing your dream clients, they're going to make you take a bunch of risks. They're going to make you buy a bunch of insurance. You now have a company worth protecting, and it's a little bit of a different scenario. But I think early on, spending the money on beefing up your software, beefing up your security, beefing up your legal and your HR functions is huge. If for no other reason, then founders shouldn't be spending time on those things. They should be building their product, marketing it, getting to market.
That's awesome. Great. And I guess on the fund side, you also work with, you know, VC funds. What are they looking for their portfolio companies to insure against? And I guess there might even be some investors or budding VC investors on the line. So
yeah,
what should VCs be thinking about as well?
It depends on the stage. To be frankly honest, most venture capital investors don't care. You know, if you look at companies, look at Uber, Lyft, the massive legal problems they've had, Google, they haven't really slowed them down. They're still billion-dollar companies. You know, if you look at any exits, any valuations, litigation doesn't really seem to matter all that much. You're either going to make it or you're not. Usually what early stage investors want is, if they're going to take a board seat, they want you to buy directors and officers insurance, which pays their legal bills if they get in trouble for something you did. And they're going to want you to buy key person life insurance so that they have a chance to either get their money back or replace you if you get hit by a bus the next day. That's usually what they're concerned about. As you get later on, when you're a C, D stage fundraising, you start to get more extensive due diligence. And certainly when you hit an exit, whether it's M&A, an IPO, whatever, there's going to be very extensive diligence around risk and insurance and what you have and haven't insured, and penalties for potential risks that are there that you can't go back retroactively and take care of. But early stage, most people look at it as kind of a 0 or 1. It's going to work or it's not going to work. They like to see that you're using good counsel, that you have the employment stuff under control, because that's something they can be held personally liable for. And then that you have that directors and officers insurance. It's going to be the first line of protection against one of the fund members, the board member, getting pulled in and having potentially significant legal fees to defend themselves.
Yeah, I guess if you're going to do the run fast and break things approach, you got to have the funding behind you to pay the fines and fight the lawsuits and things like that. So,
yep. Yeah. And really, one of the better ways to get out of lawsuits, I'm not a lawyer and I can't give legal advice, but many lawyers will tell you not having any money or insurance is a good way to get out of lawsuits. You know, if you're an early stage company, you don't have money, you don't have insurance, which is effectively money in a lawsuit, it may be easier for your counsel to get you out of any tough situations. Not with the government and with the HR issues, but if you have a client or a prospective employer or someone sue you, if you don't have any money, it's easier to make them go away generally.
There's a paradox. Kaylee or Jessica, what do you think on the sort of VC side of things? What have you run into?
I'll go first. I mean, I think, you know, they're looking for, like Tom mentioned, you know, basic employment risk mitigation, right? Like they, you know, because at the end of the day, if you don't have an employee handbook or you don't have a proper onboarding process, and then you have some kind of lawsuit or fine as a result, that's ultimately impacting the bottom line, the valuation, and their investment, right? So a lot of times when we're talking to investors, it's really just about protecting their capital, right, or their investment in the startup, and making sure that especially those little things are mitigated, and you know, the possibility of them happening is reduced as much as possible. So you know, I think they're just looking, especially I think when you move from like the seed to Series A stage, they're looking for you to be a professional company, to have basic handbook and policies and procedures, and to seem like you have the right checks and balances in place, you know, to run a successful business.
And what I'd say to that, Jonathan, is as we're preparing for a round raise, it's our pre-seed series raise. An investor asked us for D&O and key man. So I'd certainly recommend startups and founders at our size, at our stage, to start setting aside a little bit of time. It's like sometimes you're like, yeah, but an employee handbook. These are all things that go into a checklist, and when you start putting together your data room, et cetera, it's good to have them already done. And so things that we really don't like to take our eye off the ball for, but in fact are very, very important and could hold up a check. And so yeah, I think those things are huge. And even for TriNet, I mean, I love what you all are doing. For you to have boot camps, perhaps monthly or quarterly, for some of us founders to help us pull together some of these resources, and develop some sort of a cadence for us to start getting prepared. Because once you start to understand that, hey, look, an investor with $100,000 check can't give you this $100,000 check without these line items, then it kind of it lights a fire under our ass a little bit. So
yeah, that makes sense. I mean, I guess, yeah, at the time it probably feels like painful that they want it, but like they're asking for it for a reason. And I guess it's almost like, as soon as you're taking other people's money, you got to hold yourself to a higher bar. That's great. I mean, yeah. So have you already put together like an employee handbook? Do you do a lot of like onboarding now, or are you still sort of working on that?
Me personally, Jonathan? Yeah. I mean, for us, it's a Google Doc. We brought on a great general counsel who gave us a decent rate, and it's really about copy and pasting our solid legal doc for each and every one of our contractual agreements. So for the employee handbook, that's something that was given to us by the team that was providing us some D&O, and now we've got a template. So saving a little time here, but that's kind of how we're starting off.
That's great. Awesome. So it seems like the employment lawsuit, employment compliance is a thing that keeps coming up again and again. What are the most common employment lawsuits for startups? I guess Kaylee, do you want to take that?
Sure. So a lot of what we commonly see, I would say, well, Jess touched on this earlier, but a lot of like misclassification of wages, right? So she talked about, an employee being, or a 1099 being misclassified as, either or. That's a really big one. And I think getting a subject matter expert to kind of help you with that early on is really important, because there's a lot of materials behind that in terms of what constitutes a 1099. What else? We see sexual harassment is obviously a very common one, and age discrimination, really any sort of employee related discrimination, right? So early stage startups, that could be once you start hiring sort of outside of that initial circle of influence or friends or people that you know well, and then you start having to fire folks. I think it's a lot of people aren't really well knowledged in terms of like what things you can and can't say, what that process should look like when you fire somebody. So those are the ones I would say that at TriNet we probably see most commonly in terms of like the earlier stages.
Wage and hour lawsuits are huge, where you got an early stage company, everybody's working 100 hours a week. Down the line, a couple people at the top get rich and the people at the bottom get angry, and they come back and file a class action lawsuit that they weren't appropriately classified and they should have been paid overtime. And those are very expensive to defend and very difficult to settle, especially if you've gotten to the point that the company's raised significant money and has a lot in the bank for the employees to go after.
What's the best way to get ahead of that?
It's difficult and expensive to insure. I think general investment in compliance, having HR and legal people look at your time tracking or employee handbooks, the people who've been through it before and know what you need to have in place to make sure that the laws are followed and that you can prove that you followed them if you have to down the line.
Great. I actually have a question asking if there are examples of an employee handbook. Are there any resources any of you could point them to, or TriNet, do you have an example?
Yeah, we have, we can send out, if it would be helpful, we have like a templated version of our handbook that we also give to all of our clients, but certainly we can give it to this group too. That is just, sort of covering all the bases, if you will, in terms of an employee handbook. And then certainly you would want to do your research for your own particular industry, for industry specific policies. But yeah, we could provide that.
That's great. Sounds like a good starting point. So yes, we will be sending a recording this out. We'll send any sort of follow-up materials that come up as well, just so everyone has that. That's great. So I guess we kind of touched on this already, but yeah, the things that the entrepreneur should be doing from the start to get compliance in check. What is there, like a few things that you just like absolutely must see on the checklist there? Open the floor to anyone on that one.
Yeah, I mean, I think it's just about educating yourself. I mean, finding, trusted providers, either through your investors or through other founders. Like, that's how you get connected to people like TriNet or Calculator Risk. So just asking around for who other people trust, who other people use as a confidant when it comes to risk and mitigation. And then really just spending, a lot of time with those people, asking questions and educating yourself, and then doing, obviously Google is a wonderful tool. Googling things afterward, but I think just the more you can educate yourself on what your options are and what downstream impacts those have. And then also the other big thing that I feel like is important is understanding like what your potential or like estimated costs for all of those things are going to be. Because I talk to so many early stage founders and they're like, we're raising a $3 million seed. And I'm like, okay, but how much of that's, going to be used to cover, employee benefits and your HR expenses? And they're like, I don't know. And I'm like, well, then how do you know that you need 3 million? How do you know you don't need 4? So, making sure that you're really like starting to get quotes early and understanding costs as well, so that you can properly budget for those things, is another thing that I would throw out there.
Right.
I would also add, to piggyback off of that, I would just also add, that's also sometimes what will help really early stage founders with, right? Where, maybe they aren't quite at the point where TriNet makes sense, but they want to understand, okay, when I do start to, start to look at these different things, benefits, what have you, payroll, we can help, give them a benchmark to say, like, here's what this would cost. We'll go through the pricing, evaluation with them, and then they at least have an idea of what that is going to look like, to Jess's point, right? So then that way they can kind of build that in as they're trying to scale.
The biggest thing from my perspective would be to make sure that you've read and understood any contracts that come across your desk. Have a decent attorney look at them, and if they have liability insurance provisions, have an insurance broker look at them and tell you whether they're reasonable or not. We pretty regularly have early stage companies sign their dream client, and then their lawyer tells them to shoot over the contract to us, and we look at it, and it's an insane amount of insurance, and you can't renegotiate that after you've signed it. So you may have gotten your dream client, you may have $50,000 in fees coming in, but they might have just backed you into a corner of buying $200,000 worth of insurance that you could have negotiated down to $2,000 worth of insurance if you would have done it up front. So that's the best advice I have is don't let the signing of your dream client distract you from what's actually in that contract, because these big companies are really good at pushing liability down to their software providers and the people that are in there. And they know you don't have any money, so they want to make you buy a ton of insurance. You know, the big Target data breach that was a huge catastrophic event was caused by a heating and air conditioning contractor. All these big companies have big compliance departments and big requirements of their contractors and their software providers. So make sure before you sign something that someone's looked at it and you've tried to negotiate it.
That's great. Awesome. So that's super relevant. Anyone that's in B2B, if you haven't got the contracts on your desk yet, you will find that for sure. And so going back to the HR topics, Horace, like when are you thinking is the right time to hire an HR person?
Well, Jonathan, it's as soon as possible. I think as soon as it is feasibly manageable within within a burn rate. And you know, I'm not sure what TriNet's recommendations are as far as the amount of employees that that they usually recommend. But for us, our target is to get to about 8 FTEs after this next round of capital that we raise and or contracts we bring in. Now, in order to prepare for that, I was lucky enough to bring on a colleague, and her former position was a chief of staff, and so she's operations heavy. So she's really been able to help me operationalize everything that we got going on. So just kind of like that COO person has been kind of a stand-in for an early stage HR position for us. But yeah, sorry I didn't answer that question too pointedly, Jonathan, but that's all I got.
That's great. No, you found someone to take it off your hands for now, at least. Yeah. Yeah. Kaylee or Jessica, I mean, what does TriNet typically recommend?
Yeah, I think Horace is the right idea. Generally speaking, it really does depend on a lot of different factors, right? There isn't any sort of like magical formula, but typically I would say absolutely, you know, when people are looking at TriNet and they're starting to offer things like benefits, right, to their employees and maybe they haven't yet, that's a perfect time to talk to a TriNet. And then early on, if you have a lot of employees that are, you know, out of not just in one singular state, right? So you have a lot of multi-state employees. That's a great time because there's all sorts of different compliance rules, right? Like payroll in one state has to be paid out so many days after a check date versus in other states. There's all these like tiny little nuances. So those are usually two good indicators. And I don't know, Jess, if you have any other ones that are top of mind.
Yeah, I was just going to add, you know, I think in general, I guess, like Kaylee said, there's so many factors, but in general, I think most startups that we work with that are less than, you know, let's call it 40 employees, most of them don't have an in-house HR person because they don't have a need for 40 hours a week of HR, right? So that's why they hire someone like TriNet on, you know, an outsourced basis where they can just lever our expertise for maybe 10 hours a week, right, that they need us for. And then usually the person that we face off with would be, you know, a CFO, a COO, or a chief of staff. So very similar to what Horace is explaining, like that's very typical for most startups we work with. And then I think in like that, you know, 40 to 50 range, we usually see them bring in some type of in-house, like head of people or head of recruiting. And then that person is mainly focused on culture, leadership development, professional development, recruiting, and still really outsourcing the nuts and bolts of HR of, you know, payroll and benefits, compliance, and 401k. Because again, even as a 50-person company, you still probably don't need a full-time person to do those kind of administrative tasks. You just really need that person incentivizing your people and helping make sure you have the right culture for forward momentum. Like that, those are my thoughts anyway.
Right. And actually, Kaylee, you touched on it briefly, but I mean, when you start looking at people like out of state, you know, what are the things which founders or their teams should be thinking about? You know, is there a checklist do you run through in your head of, you know, topics they need to be aware of?
Yeah, I mean, like like I had mentioned, like payroll taxes are a big one. It sounds very like minutia and tactical, but it is, you know, when you go to set up a new entity, I would say it's the number one thing that startups that have multi-state employees come and ask us about, because it is a huge pain to set up an entity in a new state. You know, you have to obviously set up all the taxes, you have to set up, you know, there's just sort of lots of paperwork, and you're working with like the state agencies, and it's a huge pain. So I think that's one of the things that we help clients with a lot, is kind of taking that whole piece off of their plate. Let's see. The benefits piece, if they are offering it, we do, you know, there are different compliances related to benefits and, you know, national plans versus regional type plans. I would say those are probably the top two that I hear most consistently.
That's great.
Yeah, and just interviewing and onboarding, that's what I would add. Because like, you know, in New York State, for instance, you're not allowed to ask somebody's salary, you know, like there's just all these like nuanced things about what you can and can't ask, even just even from the very beginning when you're just interviewing people. So I think, you know, that's another big one.
Can be a bit of a minefield, yeah. I have a question here from Ron about, you know, working with overseas workers and international customers. Tom, do you have any clients that sort of, you know?
Yeah, we have a lot of clients that both started overseas and came to the U.S. and started here and went overseas. As a general statement, if you're not boots on the ground somewhere else, it's not a huge issue. Most insurance policies provide worldwide coverage. Almost anybody that wants to sue you is going to sue you in the United States. And the rest of the country, or the rest of the world, has pretty good controls in place generally for employment and lawsuits and issues. So if you don't have boots in the ground outside of the US, it's probably not a huge deal. But if you do have boots outside the ground, it's almost always a fraction of what it costs in the US. Sometimes you have to find a local insurance company to cover you. But what would cost $1,000 here in the US is like $80 a year in the UK or France. And a lot of other countries, people just don't buy insurance. People don't sue. If there's an issue, they take it up with you personally.
All right, so I should have asked you this before we started, but do you have any overseas customers or contractors, or is everyone US based?
We do have overseas contractors, yes. So it would be good. That just gave me an idea, because I did run into an issue in a situation where we actually couldn't hire a particular contractor, and you know, just thinking about what lies ahead a little bit in planning. It would be great to have kind of a cheat sheet, a TriNet cheat sheet as you interviewed potential employees from different states, and having the different states and regulations, again, just the cheat sheet right in front of you as you're potentially making some hires, what not to do, what to do. I think as this world is certainly changing to more virtual, and people are working from home, people like it, it's more productive. Big companies have said, hey, look, just stay at home. I think a lot of us startup founders will begin to echo many of these virtual strategies. And so just to have all of those rules and risk mitigation factors for onboarding and hiring folks, I think is going to be tremendous for us moving forward. As people are just spread out, you know, it doesn't really matter where you are. So you're on Zoom.
Sure. Jessica or Kaylee, overseas like workers or international management, do you have many clients that have expanded that far? What are the typical compliance issues that come up for them? Or is it just the same as the US?
So I mean, I can take this one. We don't, so TriNet is all domestic, but we do have a lot of clients that have international employees. We have partners that we work with. The concept of what TriNet does actually doesn't exist in internationally. And obviously all the rules of the game are sort of entirely different. Everything from, the actual relationship that we have here with our clients to benefits. That whole concept is always an interesting topic when we talk to folks internationally. But usually what we recommend is that, people partner with. We have other companies or other partner companies that help handle risk internationally. When we do the follow-up, I can send that out to folks too. But yeah, we don't handle a lot there, so not a lot I can touch on that topic.
Thank you.
We do support a lot of international companies with a U.S. presence, though. So that's pretty common. So I'm sure, I know Kaylee's worked with some of those too. But if it's a UK headquarter but 20 people in the U.S., we'll work with those kind of companies. And then we do help with visas and things like that as well, right? So if you're not a U.S. citizen but you're working in the U.S., we'll assist with that. But I guess to Kaylee's point, nothing beyond the US or Canada is really our remit.
Yeah, I can confirm that the visa process is not something you want to navigate yourselves, for sure. Awesome. Tom, we had a quick follow-up on your comment about the B2B contract provisions around liability insurance. What's a reasonable, is there a rule of thumb, reasonable number? Does it depend? What does it depend on?
Yeah, I mean, the first thing it depends on is what you're doing, right? If your startup prints branded napkins and you drop them off at a or mail them to someone, it's significantly lower risk than if you're performing a service or a function that could cause bodily injury or damage the company or their system. So I guess the base of that question is almost every commercial contract requires 3 types of insurance. General liability, which covers bodily injury and property damage, which is relatively cheap if you're a software company. Auto insurance, which is around $100 a year if you don't own any cars. We could talk about why that's in there, but it's in every contract and it costs $100. So people tend not to argue that. And then workers' compensation, which you can buy on your own, or if you join a professional employer organization like TriNet, they take care of. And that's a big one people are worried about because the workers' compensation system offers unlimited liability. If someone's injured, they can't bring a lawsuit outside of the workers' compensation system. Their damages are capped. But if you contract work out to someone and they're uninsured, you can be held liable. So companies are very worried about workers' compensation. So those 3 things of varying levels are in every contract. Oftentimes you'll see some sort of professional liability requirement if you're providing services, which they could also call errors of omissions or cyber, where they want to have coverage for lawsuits over your services if you mess something up. So those numbers really depend on the size of the counterparty and what you're doing. If you want to contract with a big bank, they're probably going to come out the gate asking for 25 or 50 million of insurance on each of those things. If you're providing services to consumers, they're never going to ask. If you're providing services to small businesses, maybe they'll ask for $1 million of each of those. So a lot of it depends on who your counterparty is, what services you're providing, and they can almost always be negotiated down with those big guys.
That's great. So we have a question here from Tom. I guess, whatever people understood before has sort of been thrown out the window with the pandemic, and suddenly everyone's dealing with remote workers. Are there different risk considerations? People are now crossing state lines to live, work, everything's sort of scattered. I guess Kaylee or Jessica, especially for early stage companies, anything they should be thinking about in terms of the pandemic?
Yeah, we kind of touched on this a little bit earlier, but the big one is obviously just making sure, understanding where are those remote employees going to be actually working. If you do have employees that we had a lot of clients where they would be moving to whatever state that their families are from, or there's a lot of transferring in terms of the actual state that they're being employed in. So there are some things you have to think about just in terms of the payroll component from a tax perspective, from a benefits perspective. When I moved states, I went through kind of that whole process with TriNet. So those are some of the things that you have to think about early on. Having those conversations, those open conversations, you know, I know it's not always, that this has all sort of happened pretty fluidly in terms of having a remote workforce.
Mm-hmm.
So I think having those conversations early on and understanding, you know, between employer and employee is really important, right? Not just kind of letting people go where they will, and not addressing it is important.
That's great. Tom, I mean, I guess, you know, cyber security, I guess, is one thing that popped into my head with this question. Anything that people should be thinking about, you know?
Yeah, I mean, from an insurance perspective, it's really all around the workers and suddenly being in multiple states versus one state and understanding the implications. But from a services and client perspective, you know, you need to take reasonable precautions having people outside the office. But I think the way most startup companies worked before this wasn't materially different. It doesn't really matter whether your office was in the loop and someone was working from Lakeview, or now they've decided to go to Costa Rica for the winter. You know, the risk is what it is. I mean, the only real implication we've seen outside of the employment space is in directors and officers insurance, which insures, among other things, against bankruptcy. And COVID, we would have companies that were burning millions of dollars a year with dollars in the bank. And we could get insurance really quickly and easily just by giving them some frothy, you know, they're going to raise money tomorrow, don't worry about it. Underwriters in that space have gotten very conservative, want to make sure that companies have the money to continue operations, that they're not going to have mass layoffs that could result in lawsuits, and that they're not going to be in violation of their debt covenants or have investors coming after them if things fall apart, because certainly the capital markets have not been as easy as they were before. And the insurers that insure against that are well aware of it as they're seeing a lot of claims come in.
Sure. That's actually a great segue to this question from Michelle. I'll read it out because I think it's a good, and thanks Tom for that last question. That was a good one as well. How has the recent focus on force majeure provisions impacted insurance for early stage companies? Focusing on the legal provisions in contracts is important, but is there also insurance coverage to consider?
Yeah, I mean, I don't know that it really affects coverage. It maybe increases the risk in certain areas that there's going to be litigation. You know, we have a data center that's a client of ours right now that's trying to get out of, we have a lot of people that are trying to get out of leases. And that's potentially putting them in violation of various debt covenants. They're not paying, people are playing games of chicken. That greatly increases the risk of litigation, which you can buy insurance on. So I don't think it really affects things from a coverage perspective outside of business interruption, which could be its own 10-part webinar of whether this has shut down businesses and whether insurance applies. But outside of that, I think the more lawyers get involved, the more likely is someone's going to sue, which is what insurance is there to pay for.
So we focus a lot of this conversation on like really early stage companies. You know, as people start to mature and grow, I guess Tom, you were just talking. So I'll first to Kaylee and Jessica first. But I mean, you know, are there things that matter? You know, once you reach 100, 500, 1,000 employees that like differ from early stage considerations?
Oh, you wanted to ask us first? Yeah. From an HR perspective, definitely. So like, and again, those vary state to state, but like Kaylee mentioned, you know, like for instance, like in the state of Illinois, I can't remember if it's now 20 or 25, but if you have 20 or 25 employees, even if they're not all in Illinois, if you just have one employee in Illinois, you have to offer a retirement savings, you know, so, or like, if you have, you know, X number of employees, you have to do the sexual harassment training, or when you hit 50 employees, you have to do ACA reporting. So there's all different inflection points, some of which are federal and some of which are state. But that's definitely, you know, what can be really challenging for startups to keep, you know, tabs on, and probably even for larger companies to keep tabs on, you know, because it's just constantly evolving. And so you really have to keep a pulse on it.
Yeah. Great. And so Tom, yeah, I think, yeah, as as people scale, a lot of the things I guess you advise people against initially, you probably then start to suggest.
Yeah.
What does that look like?
Yeah. I mean, as you start to either transition to a company that's becoming a target because you have a brand and you have money, the likelihood of a lawsuit, the likelihood of a catastrophic lawsuit increases. A lot of people up insurance coverage. But also when you take venture money, they're expecting some sort of exit. So as you move towards that exit, people generally try to actively clean things up because they know that they're going to go in these negotiations and they're going to agree on terms. And then both sides at the last minute are going to pound each other over what they see as issues to try to get the cash one way or the other. And a lot of acquirers are worried about lawsuits. A lot of acquirers are very worried about uninsured lawsuits or potentially uninsured lawsuits. And you could potentially have to escrow a lot of money until the statute of limitations runs out if you haven't properly insured things along the way. So cleaning those up, investing the money when you see that coming is a trend.
Got a question here from Sam. If you're making an acquisition, like early or I guess even as you're growing, what are the sort of risks that you need to be thinking about when a startup acquires majority control of another company?
Yeah, the regulatory risk is huge. So making sure that the regulated spaces like employment issues, fundraising issues along the way have been both dealt with properly, and that potentially that there's insurance in place to protect against an SEC investigation over a prior fundraising round or some employment issue popping up. But in those M&A situations, they're going to look at your client base. They're going to look at the contracts you have with those clients, what kind of liability you've taken on. And even if it's only an asset sale, they're going to want to make sure that there's money or insurance in place to cover any future claims that come out of that. Because if they're taking your people and your brand, they don't want to have to spend the money defending it, something that happened on your watch.
Great. Okay, we've got about 10 minutes left. So if you have any burning questions and you want to pick the brain of anyone on the panel, feel free to submit them. We have one waiting in line here. I guess, yeah, let's just take this one quickly. When should cyber or data insurance be purchased? What are the key considerations when purchasing it?
Yeah, so most people, I think it depends on the space. If you're business to business, most people wait until someone makes them buy it. If you're business to consumer, most people buy it once they've hit a critical mass that losing their clients' data would be painful, but wouldn't shut them down. Most people that are starting up a company have a pretty strong backbone when it comes to risk and aren't terribly worried about these kind of things. I tend to tell people from an investor standpoint, not from an insurance broker standpoint, when they're early on, that they should better spend the money on engineering and security and consultants in that space than on insurance. But depending on what business you're in, what kind of protections you have in place, and what data you have, it can be relatively inexpensive. But a lot of times, if you're processing payment, it's going to be better to outsource that to Square or someone that does it all day long. It's on their servers. They have strong security. Then build your own. And if you don't take any data that you don't need, don't store social security numbers or payment information, outsource all that. And in most cases, your risk is pretty small. And your money's probably spent better preventing the breach or the bad code that's going to cause a lot of issues other than payments to clients and regulators. You're going to have a lot of PR issues that could sink your company.
That's great. So Kaylee and Jessica, we've got a question here. Someone asking if we can find compliance people on Upwork to take care of these things. For people that aren't, quite ready to, afford like a TriNet, is that a solution potentially, or would you recommend not doing that?
I don't personally know. I mean, I know of Upwork. I don't know if they have HR compliance, professionals as part of their network. I just don't happen to know that. Mm-hmm. Although, I think the biggest consideration, so TriNet is a PEO, which we might have talked about earlier, so professional employer organization. So in addition to providing guidance on compliance, any PEO actually shares that liability with you as well in our construct. So that's like a big reason why clients choose to work with a PEO in general, is just that shared, it's not just your financial statement at risk, if you will, it's ours too. And we're a large publicly traded company. And, so having that, I guess, yeah, that shared liability is huge. If you hire any kind of HR compliance or HR consultant that's not a PEO, I don't know, I guess it maybe would depend on your contract with them, but it's unlikely that they are going to have any skin in the game or any shared liability with the outcome. They're just going to be providing you advice. And I don't know if that question is meant more for employment compliance, or maybe because I know we referenced like SEC compliance and some of those other things too. And I don't know if those people are on Upwork either, but
that's fair enough.
That helps.
I think that helps, yeah. And I guess, the nuance here, I think, is, it depends how regulated your industry is in terms of how important this is, and like how important getting good quality, counsel is. And the follow-up question from the same person was, how large of an organization size can one compliance officer manage? And I think that it does depend on how regulated the industry is, would be my sense. But Jessica, do you have a sense of like a rule of thumb there perhaps, or does it depend?
No, because yeah, like you said, it just so varies depending on, if we were talking about like trading firms, right? Are they trading just futures or futures and equities, or how many different, there's so many variables. So I don't think that there's, I don't think that there's a easy answer to that question, but I don't know if Tom or Kaylee has another view.
Yeah, it depends on your industry. If you have process software that you're selling to other businesses, it's going to be fairly unregulated. If you're selling, marijuana, it's going to be a lot more regulated. Same thing with any sort of financial product.
That's great. And a question, I guess, for consumer products, how regulated would you say it is, and what are the main things needed? That's probably quite a specific question to go into with counsel. Tom, do you insure many consumer products companies?
Yeah, it depends. If you're selling shoes, it's fairly unregulated. If you're selling something that is regulated by the government, it's a medical device. It's going to be significantly more dangerous and more regulated.
Mm-hmm. And then one broad question: what specific kind of insurance should a startup have if they are about to take on angel investment? Horace, what did you have in place when you started angel investing? And then Tom, what should they have?
Yeah, Jonathan, I think you probably know the answer to this. We hadn't started thinking about that. It was something that we certainly needed to add as we were up in the ship and adding to the ship in the air, right? And so again, I think that in summary, talking to gentlemen like Tom, having check-ins with Jessica and my guy Nick over at TriNet. Nick has been fantastic. Just being able to have some time and carve out some time with these people throughout the industry space, that they can literally just start to advise you on what's next, and they kind of see the future a little bit, and see where your startup will get to eventually, as far as how they're servicing bigger startups. And so I think being very deliberate as a startup founder, in trying to get some time with Tom, some time with Jessica, some time with Nick, is very, very important. Again, because this is all stuff that Jonathan, as you know, we'd rather not really focus on right now. We'd rather focus on
never top of the list. Sure.
Yeah, it's not top of the list. It's certainly not exactly sexy for us, but it's very, very much part of the concrete that we need to pour.
Awesome. And Tom, what should they be thinking about?
Yeah, I don't think you necessarily need to buy anything. I think the strategy is just to be educated when you talk to investors. there's no, if you are in a very litigious, very dangerous area, they're probably going to expect you to have insurance because it's core to your business. But if no one's made you buy it yet, if you're in a relatively low risk business, investors more want to see that you've thought through it and that you have a road plan of, as we scale, this is when we need to address it, and not that you've just ignored it and assumed that you didn't need it or you'll worry about it later. See, when someone takes a board seat, in that term sheet is likely going to be that you have to have directors and officers and key person life insurance within 30 or 60 days. D&O insurance you can put in place in a day or two. Key person life insurance, I've never seen it done in less than 30 days, and investors understand that. But those are both things you can worry about at closing. I think unless someone's making you buy insurance or it's really core to your business because you're doing something that's really high risk, investors just want to know that you've had a conversation, you're aware of what it's going to cost when you need to buy it, and you have a roadmap for, we're going to rent an office, they're going to make us buy insurance, we're going to start hiring employees, these are the mechanisms we have in place to buy workers' compensation and make sure that we're compliant with the various laws.
Awesome. We've got a few other questions here about SEC compliance and crypto and blockchain. I think if you're in a very regulated industry or a very fast-moving industry like crypto, you really have to go and seek specific advice, I would say. And very, very idiosyncratic to whatever you're doing and how you're doing it. So sorry, we can't address those right now. I guess just to wrap up then, I'll go sort of one by one here. Any resources you would recommend, any places you would point people to kind of get up to speed on this topic further? And what's the best way to contact you if they want to reach you? Kaylee.
Sure. I think TriNet actually does put out a lot of good resources. If you are, you fairly frequent LinkedIn, if you follow them, the company page, they put out a lot of good, especially now during sort of the COVID era. They are putting out a lot of good webinars and good content around that. So I would suggest that. And then I will actually just link Jess and I have a shared Calendly. I can link that if anyone is interested in chatting further, and also our emails too. And appreciate you having us on.
Awesome.
Yes.
Anything to add, Jess?
No, I think, yeah, Kaylee's got it covered. There's a ton of great resources on our website, and maybe we can even include a couple like hot links or whatever for you guys too.
That'd be great. Tom.
Yeah, thanks again. And I guess my comment would be, especially those last two questions at the end about the SEC, are to get a good attorney. A good lawyer is way better than talking to non-lawyers or going down internet message boards to keep yourself out of trouble and really reduce risk. And if anybody wants to chat, shoot me an email. It's my first initial, last name, tfirestein@crbrokers.com.
Awesome. And Horace, please also give us a scoop on SwayBrand and what you're up to there. Give us the quick
Yeah, we're super excited, Jonathan. Like I said, we've got a raise coming up, but we've more importantly, we've got some big opportunities with some big enterprise companies that we're staring at. But overall, if you're a startup company, you've got a product, you've got a service, you're looking to connect authentically with a diverse team of brand ambassadors, celebrities, athletes, artists. Check out SwayBrand. We'll be on Product Hunt in about 3 weeks. We're really excited about that, but yeah, we've got an all new offering, and we think that we can help startups, small and medium sized businesses, all the way up to enterprise companies looking to target audiences and specific DMAs with our unique technology and African American and Hispanic based marketplace for talent.
Awesome. And with that, we'll call it a day, but hope you can join us tomorrow for our last one on hiring a diverse team. And thanks to Kaylee, Jessica, Tom, and Horace for joining us today. Really appreciate the time, really appreciate the insights and perspectives. And thanks for joining us. See you soon.
Thanks, Jonathan.
Yeah, bye.
Thank you.